Well, joining me this week are Marcus Padley, author of the Marcus Today newsletter, and stockbroker of Patterson Securities, of course, business commentator from The Age and Sydney Morning Herald, Adele Ferguson, and Dean Patch, co-founder of the corporate governance and proxy advisory firm Ownership Matters. Welcome to you all.
Thanks, Alan.
Now, was it a bit of a hospital pass for Grant O'Brien to take over from Michael Luscombe last year? I mean, this is a tough time now, isn't it?
Well, he's certainly going to feel the pain in his wallet because it's very unlikely that the senior management group at Woolies will end up with a bonus this year.
How much is the bonus worth?
Probably $3 million across the senior executive team. Like they're committed, basically, to saying that they have to meet their guidance, and the write-down that they took for Dick Smith is going to make that very difficult indeed, and it may extend to...
This is the full year?
Yeah, the full year, yeah. So it may extend to up to 25,000 managers at Woolies. We just don't know, but this investment that he's making for the next 5 years, he's going to feel some of that pain. What
do you think of the investment, Adele?
Well, the jury's really out on it. You know, he's coming up against Bunnings, which is it's only got a 14% market share in the, hardware industry. It's really a leviathan, whereas Woolies is coming in, cold, and a lot of people are very sceptical that they'll be able to do it, and it's costing them a lot of money at a time when Coles is fighting them on prices in the supermarkets, and you're seeing some of that pain with, this is the first time Woolies has had a profit fall since it listed in, 13 years ago.
But it's all part of the cycle, though, isn't it, Adele? It's not, they're in the opposite of a sweet spot at the moment in their industry, and to go looking for some sort of cancer at Woolworths is just completely missing the point that this is a very well managed, surviving company that will continue to be invested in by everybody because its blue chip qualities remain.
And the investors still think that?
Absolutely, I think. And there's a reasonable yield in the stock as well, and it's outperformed most of the consumer discretionary retailers that got smashed. So it's the obvious rallying point for investors who invest in what I call the moron portfolio. They'll just sit on it. It's there's no point going looking for a devil in Woolworths.
But is there a play going on between investors saying Woolworths are going to pull it off, we'll invest in them, or we won't? They won't pull it off, we'll invest in Wesfarmers. I mean, is there a kind of a binary?
There was always going to be a Coles grab off Woolworths as Wesfarmers took it over, but beyond that, Woolworths is not going to scare anybody. This whole market is about risk at the moment. People are risk averse, and this is one of the least risky stocks. So people will sit in it.
Yes and no, Marcus, because from a shareholder perspective, it should be about the return on the marginal dollar employed. And so Woolies have a discretion about whether they're going to invest in this business, and they should be held accountable for that. So their core business, no one would deny that it's spinning off cash at the rate of knots and that it's good, but they don't have to do these next series of investments. They're betting quite a lot on that, and they'll have to be made accountable.
They are
for
investing for the long term.
Yeah, but it's great to invest for the long term as long as you're investing in the right businesses. And
the stock market's a relative thing, though. From my point of view, talking share prices, it's a relative thing, and I prefer to be in Woolies than the other retailers.